Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 9th of March 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. And given what we saw yesterday and the activity that was going on in the market and the economic calendar, we had a very quiet session. I will just flag a couple of key movers. Dollar yen 106.72 shortly before we came on air. The yen weakening, giving ground against the US dollar. The dollar itself is expressed by a dollar index creeping back above that key 90 psychological round number to trade at 90.17 shortly before we went live. Elsewhere, it's more a question of what didn't move when it might have expected it to. Dollar CAD and dollar Mexican peso both pretty much static despite key events on the trade front, as we'll see momentarily in the news. Things that were moving around though were the cryptocurrencies, Bitcoin, Ether and Ripple, all posting significant losses on the day. Right then, what's on the calendar? Events that may move the markets today. Plenty to get our teeth into, and we've already had some key data out of the Far East. We had producer price index data out of China for February, accompanied by CPI, consumer price index data as well, and more on that momentarily. The Bank of Japan had its key March interest rate meeting as well. We will look at that in more detail, with effectively no change there. To come at 7 a.m. this morning, we'll have trade balance data out of Germany. That's for the month of January. We'll expect to see a strong trade surplus and a strong current account surplus from Germany. Any deviation from that could shake up the tree, as it were. At 9:30 GMT, we have manufacturing and industrial production data for the UK for the month of January, accompanied by an NIESR GDP estimate for February, for the 3 months to February, although that isn't due until 1300 London time. 13:30 London time sees the meat on the bones today, and perhaps for the whole of the month, the final non-farm payrolls read before the Fed meets on the 21st of March. We have non-farm payrolls, average weekly hours, average hourly earnings, the unemployment rate and labour force participation data all for February. Expectations are for a non-farm payrolls headline number of around 200,000 jobs. Don't forget that Boris and Kathy have a live trading session this afternoon over that number. There's still time for you to register and participate in that. 13:30 also sees the release of Canadian unemployment data. This will typically be overshadowed by the American numbers, but that is important, especially as the Bank of Canada considers its next moves as regards interest rates and the economy. 17:40 GMT will see the Federal Reserve Bank of Boston President Rosengreen speak, and 1800 the influential Baker Hughes oil rig count rounds off the day's key data. Right, breaking news and comment then that's caught my eye overnight. First of all, inflation divergence has been seen in China as CPI, consumer price indices, hit a 4-year high in February, whilst the PPI, the factory gate inflation, rose at its slowest pace for the last 12 months. The Bank of Japan has kept interest rates and quantitative easing unchanged at its March meeting. The bank maintained its view that inflation would reach its 2% target by the end of 2019. Many in the market, including myself, remain very sceptical about that. Meanwhile, in America, Donald Trump has signed tariffs on steel and aluminium into US law, and separately said that he would meet with North Korea's Kim Jong-un by the end of May. So a bit of a two-way pull there as far as sentiment's concerned from the US. Right, food for thought, something to take away with you into the trading day, and why not think about this? Economists and analysts and commentators spend much of their time thinking about inflation, its evolution, behaviour and its effects in modern economies and markets. The divergence seen today between factory gate inflation, or PPI, and consumer price inflation in China will give them cause for more head scratching. You can see the sharp deviation in the trajectories of CPI and PPI data here. PPI is still rising, but the rate of change is falling dramatically, whilst the CPI, the prices that people actually pay for goods and services on the high street, sharply higher. There could be a possibility here that Chinese companies are making more money and perhaps their profit margins are expanding. They're paying less for goods and consumers are paying more for them, in which case we'd expect to see the Chinese economy growing. But if that isn't the case, then it's not clear exactly what's happening. So this will be something that we'll be watching over the coming weeks and months. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about the risks involved or the suitability of the products for you, then please do contact your Pepperstone account representative.